Welcome to the JLL Market Outlook for the first quarter of 2023, in which we have observed interest rates have been raised to 1.75% according to the monetary policy framework to help ensure financial stability in the longer term. Inflation is decreasing and approaching the target rate, which is a good sign for the overall economy. Tourism continues to be a key driver of GDP growth, and we've seen almost 6.5 million tourists in Q1, which is a positive indicator for the Thailand market. This has led to a positive trend in the retail sector, as several mall operators boosted foot traffic through remodeling into lifestyle malls to enhance the shopping experience. This positive momentum in the retail sector is set to continue, with several new projects in prime and non-prime locations set to be launched later this year. In the Bangkok condominium sector, we saw domestic demand remain robust. Pre-sales for under-construction projects witnessed a slight increase from previous set quarters. JLL expects foreign demand for condominiums to rise as tourism improves. This will boost the occupancy for rental units, which in turn will lure speculative buyers to return. The investment market remains cautiously optimistic. We continue to see local developers as the main demand drivers, acquiring both freehold and leasehold assets. This is reflected by the total land acquisition of the top developers, which has increased from 56 billion Thai baht in 2021 to 71 billion in 2022. And already in 2023, we have seen 77 billion invested. In terms of foreign investors, we see positive signs for the JV market, with reputable local developers focusing in central business areas. However, land ownership structures remain one of the key concerns for foreign investors. For the logistics sector, JLL anticipates further activity in the 3PL and e-commerce industries. The market is expected to see around 100,000 square meters of new supply by the end of this year, which will increase the vacancy rate. However, the majority of developers are opting for a build-to-suit approach. Therefore, we do not expect a major influx of ready-built warehousing entering the market. In the office sector, JLL saw the demand dominated by occupiers upgrading to the new and recently completed projects, with a net absorption of approximately 30,000 square meters in Q1 2023. This flight to quality trend is the key theme and is set to continue. Therefore, aged assets need to implement asset enhancement strategies to retain and attract occupiers in this increasingly competitive market. Overall, in Q1 2023, real estate activity increased across most sectors, and we believe this will continue to improve this quarter and into the second half of 2023.
In the first quarter of 2023, total office stock in Bangkok reached a record high of 10.3 million square meters, with 6 new projects totaling over 180,000 square meters this quarter. This marks the highest quarterly supply addition in a decade. However, new completions open with low physical occupancies and are expected to fill up over the next coming months. Demand for office space saw a flight to quality, with net absorption over 30,000 square meters, showing a recovery from negative levels seen in 2022. Occupiers upgrade new spaces, creating significant vacancy in the market, reaching record highs since 2010. Notably, there is growing demand for office spaces with green credential, which has become a new norm for Grade A properties. And the recent entry of Wire Score in Bangkok will raise the standards of Grade A office space in the future. In terms of rent, Grade A properties in Bangkok city center experience fast-growing rent. This is an improvement after 5 consecutive quarters of stability. Premium rents were observed in new completions and new renovated buildings, while other segments remain steady. However, older properties without renovations experience a faster decline in rents. Over the next 12 months, there will be a wave of new supply entering the market. This may result in insufficient demand to fill the available spaces. In fact, The upcoming supply in 2023 is expected to surpass the previous record high seen since 1999. As a result, the vacancy rate for Grade A properties in the city center is likely to spike over 25% by the end of the year. Furthermore, new projects will drive market rents upward, along with the increase in capital values. This competitive market environment may put pressures on older assets to undergo major renovations or pursue green credentials to remain competitive. Bangkok retail stock reached nearly 7.6 million square meters in the first quarter of 2023, as the result of the completion of more than 10 projects that added about 87,000 square meters of NLA to the market. Notable projects include the second phase of Icon Siam and the reopening of Central Lamintra following its renovation, both of which are prime grade retail malls. The overall market showed positive leasing activity with a decrease in vacancy rate, driven by an inflow of new tenants in central business area, filling the newly completed renovation in prime malls. However, while the market is showing positive signs, there are still some spaces in newly completed projects that are still yet to be occupied in some retail malls. Moving to the trend to watch in this quarter, we see that some retailers who have been affected by the lack of tourist activity during the pandemic are looking for the new ways to create experiences and increase foot traffic to their malls. One of the ways that they are doing in this is by collaborating with the international partners for pop-up events to provide a unique and exciting experiences for consumers. Looking ahead to the next 12 months, Bangkok retail market is set to see an influx of supply, with almost 30 projects scheduled to be completed by 2023. These new supply are expected to drive up vacancy rate in the near term and also put pressure on aging assets to adapt and remain competitive in the market. At the same time, the recovering economy is expected to create a positive trend in the market by providing opportunities for both investors and developers to capitalize on the growing demand. For Bangkok condominium market in the first quarter of 2023, there were around 790,000 completed units due to the new completion of around 9,000 units in the first quarter. Many developers expanded their new launches even lower than previous quarter by nearly half. We discovered that the majority of new projects were launched in the outer north of Bangkok, which cover Khong Luang and Ban Khen districts. In terms of market sentiment, Bangkok condominium continue to improve, especially for recently launched projects which received positive market response. Additionally, a number of pure stagnant units were successfully sold. Similarly, after falling to the lowest level in decade in the previous quarter, this quarter the pre-sale rates of under development projects increased slightly. However, the booking cancellation continued to impact the Bangkok market, particularly for mass market products. Despite the resumption of international travel, foreign demand for condominium remains pending. Therefore, domestic demand will continue to be the main source during this time. Moving forward, as developers announce their 2023 strategy, we anticipate a number of new launches in the prime market over the next few quarters, particularly in the residential component of Bangkok and Suntria. Furthermore, we expect a rise in pre-sale activity and new launches in 2023. We are also looking for foreign demand to fully rebound, not only in China but also internationally.
(2023) has started as one of the more active years for the logistics supply. 3 new projects have added a total of around 200,000 square meters of new warehouse space to the eastern vicinity and northern vicinity submarket, most of which will be launched in phases, driving the prime grade warehouse stock up to about 4.9 million square meters. While up to 100,000 square meters of warehouse supply is expected to be completed by the end of the year, driving the supply up to 5 million square meters in total. And after a record low vacancy rate in 2022, we have observed the vacancy rate rise to 10.3%, as a result of the supply influx. However, this is viewed to be a short-term effect since the demand for warehouse space is still strong, predominantly from the 3PL and e-commerce sectors. We have also seen a slight increase in average rent. Prime grade warehouse rent rose to 161 baht per square meters per month. This increase was attributed to the high rent of properties in Samut Prakan province, as well as the addition of the higher standard warehouse supply. Looking ahead, more supply is expected to enter the market in 2023 and 2024, which will have an effect on the vacancy rate. However, the effect should be moderate as most developers have opted for the build-to-suit approach. While the rental rate is predicted to compress slightly as a result of strong competition, demand growth for warehouse space will continue to grow, especially in prime areas such as the eastern vicinity and northern vicinity submarkets, while the positive momentum of the Eastern Economic Corridor should provide new opportunities for investors.